I was very happy to exit the rest of my natural gas trade today, so were my members. I only entered the position on Friday, but it pretty much shot up since then, and I was happy to get out. Again, I don't tell you exactly how I entered the trade because the state of Florida calls that results-based advertising. If you'd like to know what I did, reach out to me. Click the little red email icon in my bio. If you're paying attention, I shared with you last week that I thought on the S&P 500 SPX, there could be two different routes we could take, and I was showing you some white lines and some yellow lines. The white lines took us down faster. The yellow lines had a bear market rally and then falling after that, well, after a little bit of time, turns out the yellow lines, what I think will turn out to be a face-ripping bear market rally, is the fork in the road that the market has taken. So on really weak volume today, which is another signal that mom and pop is just getting sucked into this bear market rally and they're going to get their face ripped off, I think the S&P 500 can come up to about 5,660. I shared that with you last week. Now, once we get to about that level, and it's not going to hit it exactly, but once we get to about that level, I don't think it falls in a straight line, but then I think we chop down to about 5,100. It's going to be nasty. Most people are not going to expect it. They're going to be left holding the bag, but because you are following me here, you will already know that it could happen. I personally say the next sell-off could start sometime late this week or even Monday, but don't get your face ripped off. The economy is not good, my friend. I don't know why people are buying into this rally, probably because Cramer is telling them to buy into, but in my opinion, there's no logical reason other than maybe a short trade, but most people aren't buying thinking this is a short trade. Most people are buying thinking either the bear market never existed, the bear market's over, John doesn't know what he's talking about. Yeah, good luck with that. Thank you to the Kabasi letter for this. The Atlanta Fed has revised their Q1 2025 GDP growth rate for the United States here, their estimate down from negative 2.4% to negative 2.7%. Adjusting for gold imports and exports, they now see US GDP contracting by negative 1.5%. If this is the actual reported number for Q1 of 2025, then we are 1 quarter off of a technical recession. Be very careful. One of the other things that is happening here, the other thing that is like falsely propping up what you think is the economy here, is so many goods were purchased before the tariffs were enacted. They call that front running the tariffs. That, yeah, might make the economy look okay because they bought so many goods ahead of time that they would have normally bought later, but when they don't buy them later now because they were all front run, and as the economy continues to slow and people buy less and less goods, I tell you, this is an ongoing bear market. Yes, we are in a bear market rally, but be very careful. This is an ongoing bear market. The 10-year yield continues to fall in a bear market and slowing economy, which we are in. Decreased interest rates are bearish. Here we go. We already have the confirmed breakdown below 4.32% as of this afternoon. Sorry, I didn't label it. As of this afternoon, we now have an unconfirmed breakdown below 4.20%. If we close below 4.20% today and close meaningfully lower tomorrow, that would confirm the breakdown. That tells me the 10-year yield could then go down to 4.07%. That is bearish. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.